One of the things you're going to have to think about for your accounting standard is, as you set up your company, is, am I going to be based on accrual accounting or cash basis? Cash basis is when you've actually received the cash, when you sell something to somebody and you receive the cash, you account it. For example, is if you have a restaurant and somebody buys the food and they pay you cash for the food or pay you for the food, is that you now on a cash basis would account for that money received to your company right then and there, because they put it in the cash register, you swipe the credit card, and now you receive that cash. What accrual basis means is that if you go out there and sell something and you have a contract, a sales receipt that they're going to pay you, but they haven't paid you yet, you still recognize that revenue as being paid. This can directly impact your cash flow, and that's why you have to think about this, accrual versus cash basis. Because if your cash flow is based up on, I've now received I've now have the money in the bank and it's cash, it's something tangible I can deal with, or do I recognize that as cash, or do I recognize that on my books or on my, as soon as somebody signs off the invoice? You have to decide as your company which way to go. But you remember, in the end, cash in the bank is easier to recognize than something that is non-tangible or a piece of paper that payment may be coming later.